Hey everyone, welcome back to In Her Wallet podcast. I'm Sofiia, your host, a financial educator and founder of In Her Wallet. It's March, which means tax season is here, and if you're self employed, it's time to get things in order. Last year, I did an episode with Wealth Simple all about filing personal income taxes as a traditionally employed person. That's episode 64, and I've linked it in the episode description if you want to check it out. But today, I wanted to dive into self employment taxes because let's be real, they come with a whole new set of challenges and responsibilities. And today I'm covering it with a special guest, Cindy Kumar, who is a chartered professional accountant who helps entrepreneurs master their finances. She has 10 years of experience. She's worked for KPMG, one of Canada's big four accounting firms, so she knows what she's talking about. If you decide that you want to work with Cindy after listening to this episode, she has kindly provided us with two options. First, if you want to hire her as your accountant, she offered a 20-minute free call to In Her Wallet community before booking her officially. You can see that link in the episode description. Additionally, Cindy has a 4-week course about filing your taxes. The link will be in the episode description. So if you're a freelancer, consultant, small business owner, or making money online, today's episode is for you. Let's get into it. Cindy, welcome to In Her Wallet podcast. I'm so excited to be recording with you today about taxes for self-employed people.
Thanks for having me and giving me the opportunity to talk about taxes and finances.
Can you tell our audience a little bit more about what you do and how you help professionals with their taxes?
So, I'm a chartered professional accountant and fractional CFO. I've been in the finance and tax industry for about 12 years now. In the last 30 months, I've helped over 200 women entrepreneurs with their finances, taxes, and helping them change how they feel about looking at their numbers, looking at their bank account. There's so much fear around it. So just working through that and making sure that they can hit the 6 and 7 figure goals that they've been wanting to and just making it so much easier for them.
I love this, Cindy. In fact, I know we have a few people in common that are your clients, and they always rave about how you help them and how amazing you are for their businesses. So I know firsthand that your expertise helps a lot of people. So that's amazing. Congratulations.
Thank you.
Cindy, before we dive into the main topic about taxes, I like to start every conversation with a few rapid fire questions. They're always the same for every guest. So it's really fun for our audience to get different takes from different experts on these questions. The first one is, if you look back, what's the one purchase that stands out as the absolute best thing you ever spent money?
For me, it was when I went to Alex Hermosi's workshop in last September. It was just very eye opening.
How was it?
It was amazing. I'm going back this September. They're actually going to work in my business and help me grow and scale it.
Okay, next question is, every budget has its guilty pleasures. What's your guilty pleasure when it comes to money?
That's a great question. I would say going on a trip or some sort of professional development.
I find travel usually is the number one answer for majority of guests. And I personally would answer the same thing as well.
Yeah. You don't realize how much a trip can cost.
I'm planning a trip to Italy right now for June, and I am just like, my eyes are watering from seeing hotel prices.
Yeah, it's crazy. They just add up.
Okay, final question. What's a financial milestone that you have achieved in the past that made you feel like a total money boss?
I feel like just hitting 6 figures in my business. Now my goal is to hit like $1 million. So it's like just building up the confidence to get there.
Actually, Cindy recently started a podcast. She's doing a challenge where she releases an episode every single day. So definitely check it out. As mentioned before, we're talking about taxes for self-employed professionals. And the first question I want to ask you is, what are the key differences in tax obligations for people who are employed by a company and people who are self-employed?
I would say the number one thing is tax filing deadlines. So if you're working as an employee, you have April 30th as your payment and filing deadline. Whereas self-employed, your payment deadline is still the same, April 30th, but you would have until June 15th to actually file your taxes. You also have more write-offs and things you can claim against your business income versus if you're working as an employee, you're not really having the opportunity to like claim your home office or like going to meet up with your friends for coffee or discussing business things, like you're very limited on what you can claim.
So that kind of brings me to my next question. What is self-employed tax and how does it compare to traditional tax rate that traditional employees would pay? How can people prepare for it and calculate it?
That's a great question. So with personal taxes, you're based on the tax brackets, and there's different rates based on it. There's a provincial portion and there's a federal portion. As an employee and self-employed, you're taxed at the same rate. It just
Mhm.
depends on how many write-offs you have. If you are self-employed or employed, you can use the Well Simple tax calculator, put your income in there, and it'll tell you exactly how much you're going to be paying in taxes for the year based on which province you live in.
As a self-employed person, can I still file my own taxes or do I need to hire a professional to help me do it? I understand that when you have an incorporated business, you cannot file taxes by yourself on behalf of your business. You have to use a special program, I believe, and an accountant to do that for you. So how does that compare to self-employed people?
For self-employed, like your income's still going on your personal tax return. It's just there's a separate business schedule where you'd put like all your income and your expenses for the year. You can totally file it on your own. But what I find is people miss out on so many write-offs and they end up paying more to the government than they need to because they just didn't know what they could claim.
Right, right. And I'm excited to talk in detail about the different write-offs. I think that's a sexy part of being self-employed and being able to save a little bit more money by writing things off legally. But before we talk about that, can I ask you what's one of the most common mistakes you see self-employed people make when filing their taxes?
That's a great question. I would say not filing on time, like they don't even know when their filing deadline is. Also not knowing what you need to report, what you need to track throughout the year. It just becomes a complete mess where they're scrambling in April, sending random receipts or whatever they find to the accountant, and then they're just going to file based on that. So it's really important that you track things like either on a monthly or quarterly basis throughout the year and work with your accountant so you know exactly what you need when it comes tax time and how much you're going to pay so you can save up that amount monthly.
Okay, so kind of I want to break that answer into two parts. We said
Okay.
that the tax filing deadline is April 30th for self-employed people. So you can file until June 15th, but the payment of taxes is due on April 30th.
Right.
Doesn't it kind of work
It
the
doesn't
opposite
make
way?
sense. Yeah. I don't understand the Canadian tax rules. It makes no sense. The corporation's the same way too. Your payment is due before the filing date.
So I assume for majority of people, whether you're filing on your own or whether you're working with an accountant to help you, you will create your tax filing and then you would pay taxes because you need to know how much you owe, right?
Right.
Okay, got it. And then the second part, you said the most common mistake is people do not know what to file and they tend to miss things. So, can you kind of provide us with a few bullet points of the most important things that you need to collect in order for you to sit down and actually file that tax return as a self employed professional?
So if you have separate bank accounts and credit card accounts you use for the business, basically you're just going through those statements, adding up everything you spent for the business, kind of categorizing it in different areas like subscriptions, membership, professional dues, meals and entertainment, some advertising, some travel. You would just basically categorize everything on a month to month basis. And then at the end of the year, that's what you would report on your taxes.
Is there anything else we are reporting on that tax return besides the things that can qualify for write offs and those business expenses that you just mentioned?
Those would be the primary things if you're self employed. That's all the information you would need.
And you need to know and report how much money you've made.
Right.
I find that for some people, and it's a very common question when I was preparing for our episode on forums like Reddit. I read people are asking, how would CRA actually know how much money I made? So, can you explain to us how does one calculate how much money you need to report? I understand there is probably a very kind of easy answer is you need to report everything you've made. But how would CRA know if someone e-transferred me money or if I got some in cash? I know it's a bit of a tricky question, but can you clear up the
Yeah.
air there for us?
Yeah, I get this question all the time, and honestly, they don't know. It's based, like, on you to actually report, like, every dollar that you earn, and they could audit you, so they can audit you within a 6-year period for each tax year. So you actually need to keep receipts and documentation of everything. I just went through a 4-year, like, audit for one of my clients, and they asked for all the bank statements, they went through all the deposits and everything. It was for a corporation, so there was a separate bank and credit card account, but I find a lot of self-employed people, they just use their personal bank account for everything, and in that case, CRA will go through your personal transaction.
Got it. So, kind of the golden rule is if you're self employed or have a corporation, it's best to divide things by having a separate bank account for your business needs. Is that correct?
Yeah, that's the number one thing I tell everyone when they start up a business. Things may seem like small right now, but if you're not tracking anything, like 12 months later, you're looking at e-transfers. Do you really know which ones are personal or business? And your clients, if they're transferring you deposits, like how do you know if they're transferring you the correct amount if you're never looking at your statements?
And I find it so difficult to track the e-transfers you have made or received because there's very limited capabilities that bank apps have in making notes and pulling up the history. I think it's only limited to like a year or 90 days, something like that. So I think it's a great
Right.
idea to just establish a separate bank account. But also, you don't want to be sending your accountant your personal bank statements. What if you some expenses that you don't really want people to see? I think it's a great idea for that reason as well. So, what are the common myths that you see your clients have about what is deductible and what isn't deductible for self-employed professionals?
That's a great question. I feel like a lot of people think like anything they pay for, they can just claim it in the business. But that's not the case. It really comes down to like, how is it helping you earn more income or helping you develop so you can be a better business owner? That's what I tell all my clients. If it's not doing any of those things, like you're just going to buy a new wardrobe or just general kind of Sephora shopping trip, less like you're a makeup artist, like you can't be claiming those things.
Okay. Well, for example, I'm a podcaster. I have video content. I believe that in order for me to show up as a better expert of mine, look presentable, I do need to color my hair and go for a facial. Would that qualify as a business expense?
As long as you have the receipts and everything, you can report anything. But if CRA comes and asks you about that, as long as you have documentation of your receipts, you wrote on there what the purpose was, then you might be fine with it. Whereas clothing, you can wear it on a day-to-day basis. So you wouldn't be able to claim that unless you have your branding or logo on your clothing.
A family friend of ours, he's actually in oil industry, but he's like the guru of tax write-offs. I won't mention his name here, but he writes off everything, including underwear. He says,
Oh,
in
wow.
order for me to show up to a meeting, I
Yeah.
need to feel confident. I need to look good. I need to have a suit on, look polished. So, and I've always found that pretty interesting. I think that's almost walking that gray line and
Right.
really asking CRA to come after you. So you probably would not advise something like that.
I wouldn't advise anything like that just in case, like if you do get audited, CRA can reassess you and then there's interest and penalties you're going to pay.
If we were to kind of list the main categories that would qualify for self-employed write-offs, can you name a few?
Yeah, that's a great question. I do have a write-off guide of 100 write-offs. I'll send you the link as well. You can share it with your listeners. But common ones like advertising, you're doing like branding photos, any marketing, a lot of networking events, community groups. I feel like subscriptions, a lot of things like people are buying nowadays. If you're buying like, office equipment, decorating, meeting up with another business owner to discuss business stuff or just collaboration ideas, those kind of things you can claim. If you're buying gifts for your clients, like any merchandise you're making, any gift cards, alcohol, you can claim those things. As long as your receipts have documentation on them, it's totally okay. You can also claim like your home office. So if you're renting your place or you're paying mortgage, you can claim like your mortgage interest, property taxes, any repairs and maintenance. If you have someone coming in to clean your house on a weekly, monthly basis or whatever, you can claim a portion of that as well. The list of 100 write-offs will give you like a good breakdown.
Amazing. I didn't know about cleaning services for home.
Yeah.
I mean, my home is my office, so I can see how that logically makes sense. But I didn't know that. I can
Yeah.
actually do that.
Yeah, you totally can.
And what kind of portion? 50%, or how does that get calculated?
That's a great question. So it's based on the square footage of your office space. So it doesn't have to be exact, like Siri is not going to come measure your house, but just a rough estimate. So if it's like 20% of your house, then 20% of your cleaning fees you can claim.
Got it. Got it. And then I have another follow-up question. Thank you so much for highlighting some of the categories. Obviously, I learned something right there
Mhm.
already. But I know for my husband, for example, he's limited to the value of a gift that he can gift to a client by the industry standards. In finance industry, you cannot gift a client anything above the value, I believe, of $200.
Right.
So
Yeah.
is that kind of only specific to finance, or do you find that CRA normally has that as a golden rule for? I mean, it probably wouldn't be normal if I gift someone a $5,000 vase, right?
Right. Yeah. No, the same rules would still apply across any industry.
Okay. Okay. Great. So my next question, Cindy, would be: are there any common deductions or write-offs that self-employed people overlook?
That's a good question. I would say like the home office, like we just discussed, cleaning fees, mortgage interest, property taxes, like those kind of things add up. And those are considered personal, but there is an overlap since a lot of people are working from home now.
Right, right. Okay, good. Now let's dive to the audit. If you get audited by the CRA, we kind of touched on that earlier. What triggers the CRA to send you a paper saying, okay, now we're going to go back 6 years and see what you spent money on?
That's a great question. As of right now, it seems like very random. But before, when I was working at a firm, they were doing a lot of audits for like realtors. They spent a lot like on marketing, meals, and entertainment. So what would happen in those cases, like CRA would send a letter. They'd ask for like the 12 largest like marketing expenses and sending copies of those receipts just to verify that it was actually for business purposes and it was for like a client or something.
Got it. So kind of they would look at your tax filing and see if there are any red flags. And
For
oftentimes meals and entertainment, I assume, would fall under the red flag category.
right. Or even for example, like let's say you made like 100K last year and you're sending about like $1,200 for meals and entertainment or advertising. Whereas your income's the same this year, but then now you're spending $5,000 on meals and entertainment and marketing. So you're just going to be like, your income's the exact same. Why are you spending more on this type of expense? Like, what kind of happened? Whereas if your income's increasing and that spending is going up, it kind of makes sense.
So you almost can look at these red flags from the monetary point, but also from the point of, okay, why are you renting a yacht to take your business partners on a cool harbor tour kind of thing?
Right. Yeah.
Got it.
And when
Makes
someone
sense.
works with an accountant too, like they're going to be looking at the numbers and comparing things too. So that's a conversation they can have with you as well. Or you can even ask them, like, does anything look like a red flag that Sarah may question so I can get my receipts or things gathered up in the meantime?
And in that regard, it's probably a good idea to work with an accountant because they can foresee these red flags in advance and tell you, this looks a bit suspicious. Maybe we shouldn't file this or be more careful with this next time, kind of thing.
Right. Totally.
So, if in a scenario, I have a business, let's say I make $200,000 a year in my business, and CRA sends me this letter saying they want to audit. What are your tips for handling this smoothly?
That's a great question. I would say don't panic because that's like the instant reaction. People just go in panic mode. So what the letter usually says you have like 30 days to respond. I would sit down with the accountant, go through that letter, get full understanding of what they're asking for, and then calling up that agent, getting any clarification. Your accountant can also fully handle things for you as well. They can understand what they need and the amount of time it's going to take. So CRA is more than happy to extend the timeline. Like I mentioned, the audit I went through, like it took us 4 months because it was for 4 years, but they were totally fine with like giving my client time to find all their invoices and gather things. So they're cooperative. You just have to be communicating with them throughout the whole process. And like getting mad at them or like saying things to them, it's not going to take you anywhere. Like they're just doing their job at the end of the day, too.
I think as with anything in life, getting angry or, you know, showing any form of tension or rejection would only make things worse. So I think that's, yeah, kind of staying calm and working with a professional to help you handle it is a great tip. You did mention earlier that it's very important to keep your receipts up to, you mentioned 6 years.
Yes. So they can audit you within a 6 year period. So right now we're doing 2024 taxes in April of 2025. So you would need those receipts until like 2030.
Do I need to keep physical copies or will digital copies suffice?
I would highly recommend having some sort of digital system, whether Google Drive, Dropbox, or if you use a bookkeeping software, you can upload your receipts directly in there. I wouldn't recommend keeping physical receipts because ink tends to fade over time. Receipts are kind of thrown everywhere in your car, in a storage box somewhere. And then it just becomes hard to kind of go through those boxes and find those typical receipts. So as long as you have like a digital system by year or something like that, it just makes it so much easier.
So, for example, if I'm going to expense a lunch at Cactus Club, I can simply scan that document, put it in my Dropbox or Google Drive, and trash that paper.
Yeah, totally.
Okay, got it. What if someone cannot pay their tax return in full by the deadline?
So what happens is there's interest that's accruing daily, and CRA agent will send you a letter. If you ignore it, it's going to go to CRA collections. It's really important that you deal with that call right away because they can garnish payments directly from your bank account if they wanted to. They can stop your bank account too. I had that happen to a client. They went into full panic mode, but they've just been ignoring CRA's calls. So even if you talk to the collections department, they can put you on 12 to 24-month payment plan, depending on the agent and what the amount is. It's really important that you just communicate with them.
Yeah, so communication is key, and just explaining to them the circumstances you're at will likely help you receive some form of plan or any extension that you might need.
Right, but it's also important to start saving up, like, every single month too, putting money away.
Yeah, so let's talk about that. I understand that when you're traditionally employed, the company already subtracts the money that you owe to the CRA from every paycheck that you have. So likely by the time it's tax filing season, you do not need to pay anything extra. Versus when you're self-employed throughout the year, the money that you earn, you just collect it, you spend it, you reinvest it into your business. But by the time the tax season comes, you calculate how much you've made, you calculate how much you qualify for deductions and write offs, and then you're left kind of with the amount that you need to pay back to the CRA. What is the best way to handle the self employed scenario and how to know how much money you'll need to pay to the CRA in advance so you make sure that you save that amount throughout the year?
That's a great the simple way I recommend to all my clients is saving 20 to 30% in a separate savings account for taxes. The other option is if you're doing your monthly bookkeeping quarterly, putting your total profit amount in the Wealthsimple tax calculator, and then it'll calculate the amount that you should be saving.
Oh, cool. And then if you keep it in the savings account, hopefully it makes you some interest as well. And that's obviously beneficial too. Do you know any good accounts that you recommend to your clients to kind of uh, make good use of that?
That's a good question. I know like EQ Bank, there's Wealthsimple. There's so many different banks like coming out now. I'm not really sure what the interest rates are because everything's always changing. But just sitting down and just doing a Google search or something, even talking to your local banks, you already have that history built up with your bank. Why not ask them what kind of savings accounts they have to offer you?
But kind of the rule of thumb is to save 20 to 30% off your monthly paycheck to keep for tax payment.
Right. Yeah, that's what I usually recommend. And
Okay,
it's better to
great.
oversave than under.
Mhm, mhm. Are there any tools or softwares that you recommend for managing finances throughout the year and simplifying that tax preparation process for self-employed people?
That's a great question. I would say it doesn't matter how big or small you are. Everyone needs a bookkeeping kind of system. Just to
Mhm.
simplify things, you can send those reports to CRA if you get audited versus having separate Google Sheets and CRA is trying to piece together things. And also, you're not going to remember what happened 6 years ago either. Having a system that makes everything super simple and clear. There's a lot of bookkeeping softwares like QuickBooks, there's Zero. Actually, you could sit down with the bookkeeper too. They can get you set up. You might not need monthly bookkeeping, but it's good to sit with an expert that does it on a daily basis that can help you get set up and put systems in place.
So let's say I am someone who is self-employed, who up till this point has been filing their own taxes, or maybe I just recently transitioned from being employed to self-employed, and I want to hire you to be my accountant. How would our work together look like throughout the year? What do I need to send you? What's kind of the cost of working with you?
That's a great question. So I offer different packages because everyone's in different stages of their business. With my self-employed clients, I do have a package where they can book 3 calls throughout the year. We go through what's going on with their business, looking at what their profits at, kind of strategizing how much they're going to pay for taxes and making sure that they're saving up ahead of time. I don't actually do the bookkeeping, the data entry stuff.
Okay.
Advise find like a bookkeeper or I can connect them with bookkeepers that can handle that stuff. I'm more like tax strategy, financial strategy, helping them grow and scale at the same time, having a plan for taxes and trying to optimize their tax write-offs.
Got it. So even if I were to hire you to file my taxes in April for previous year, you would not be keeping my receipts and keeping the database of my kind of deductions and write-offs and all the papers.
That's correct. Yeah. Because the accountant doesn't need the receipts. They just need the total income, the total expenses. The receipts are more if CRA does an audit.
Okay. And what kind of information would I need to provide you to set you up for success in filing my taxes as a self-employed person? For example, someone who has a media company, has a podcast, has a few revenue streams. How would that look?
That's a great question. I have like a self-employed sheet that you would fill out with your income. I have all the expense categories directly on there. So you would just fill those amounts out. And then I would go ahead, put that information in the tax return. And then I would look at like how much you're going to pay. And then once we
Got
feel like we claimed everything possible, that's when I would go ahead and file. And then I would give you checklists and things like during that process that you can just use for lifetime. Like I really set
perfect.
up my plans for success. So I know
Yeah.
exactly next year they have those sheets. As they're paying for things, they can be like, okay, this applies to that category. I need to do this. I need to take pictures of my receipts. Like the second year is a smooth process because clients know exactly what to do.
How much in advance do you suggest your clients start preparing all the paperwork and the numbers that you need to file taxes by the deadline?
I would say as soon as possible. Like last year, I worked with people quarterly. So like in January, they're already sending me their stuff.
Got it. And Cindy, can I ask you on average how much would it cost a self-employed person to work with a professional like you? Is it usually percentage based or flat fee based or commission based? What's the structure there and the approximate amount just so our audience can know what they can expect?
But, like, my packages start at, like, 1,500 plus. It obviously depends on what stage of your business you are, what kind of support you're looking for. I would say I'm more of, like, a financial advisor. I'm, like, a business partner. I'm in it with you versus just meeting you once a year to enter numbers in a tax return. That's not really adding value to you at all. So if someone's just looking for tax filing only, I just refer them to other accountants because my goal is to really educate, empower, and make sure you're set up for success.
Cindy, can I ask you for those who are in the higher tax brackets, for those who might be earning more than just 100, $200,000 a year, what are some strategies to minimize their tax liabilities legally?
That's a great question. I would say deciding if you need to incorporate, like sitting down with a lawyer or an accountant, kind of strategizing that part. I usually do that when I'm working with self-employed clients. So I actually had a last check. She was making over like 100K. She's living at home. So you can imagine minimum expenses. She was paying a lot in taxes, and her family accountant never even had the conversation with her. Like, do you think incorporating would be good for you? And explaining that whole process. We ended up incorporating her this year, and she saved like over $20,000 in taxes that she would have been paying on the self employed side because she doesn't need that money out of the corporation because she's living at home. Able to save that
Incredible.
money in the corporation, and then she can pull it out once she buys her own property, gets married, moves out, and then she has that money in their corporation.
What do you think is the number one sign of someone being ready to transition from self-employed taxes to incorporating their business?
I would say if you're making a lot of money, but you're not spending as much, there's money left over in your bank account, then I would suggest incorporating. It obviously depends on your goals as well. If you're kind of running 3 or 4 different side hustles, then it makes sense to stay self employed versus if you're running a corporation, you know exactly I'm going to be doing marketing or something specific and you're going to stick to that long term, then it makes sense to incorporate that business because you don't want to incorporate like 3 to 4 side hustles and you're barely making any money in it.
Can we illustrate this a little bit more? Say I make $100,000 a year, but I only spend 60,000 of it on
Right.
my business expenses and lifestyle. Does that mean it's time to incorporate or not yet?
It would depend, like, are you planning to use that money at all? Let's say you had the 100,
The
you spent
leftover?
the leftover money. What are you planning to do with that? Because if it's in a corporation, you're gonna be taxed when you pull it out as either a salary or dividends from that corporation, and then you're gonna report that money on your personal taxes. So it's pretty much going in and out.
Got it. So it's interesting. Okay. And if I'm self-employed and that's the ratio, how would that mean I'm good? Or would you suggest maybe let's look at incorporating?
I would say I wouldn't even recommend incorporating at that point. If your income's actually at 100K profit, then and you're planning to grow and scale that business and you're planning like 500K or 300K in the next year, that's when it's like, let's sit down and strategize something.
Okay, great. So that's with regards to incorporation. Can retirement plans like RSP be advantageous for self-employed individuals?
That's a great question. I've actually been having these conversations with my clients lately. And for most of them, like RSP contributions don't make sense because that money is just sitting in there. And then when they withdraw it, they're going to be taxed on it. The whole point of the contributions is kind of saving up for retirement and the future. But a lot of people, like, they're spending as much as they're making groceries, mortgage. Like, there's so many high expenses these days where it doesn't make sense to put that money in those accounts.
Yeah, I always say first focus on maxing out your tax-free savings account. If you're not a homeowner yet, then focus on your first home savings plan or account. And then after that, kind of start looking at RRSP. I personally think that unless you're traditionally employed and have your employer match your RRSP contributions,
Right.
that shouldn't be a priority because otherwise, if they do that, you're leaving money on the table. Otherwise, I would say RRSP should not be on the top of the list.
Yeah, I advise that.
Cindy, how can hiring family members such as your sister or brother or your spouse or your children be a tax saving strategy, if at all?
So for that, you have to come up with a reasonable amount that you're planning to pay them for what you'd actually pay someone else doing that same role. And you'd need like everything clear in writing. So if you are hiring your kids, you have to show that you're actually paying them like a paycheck and having them on payroll.
And does that save me any taxes or no?
Yeah, it would just be like a normal write off.
Okay. But that would be the same thing as if I were to pay someone else.
Is money still
So
going in and out of your bank account?
got it. So what kind of like the benefit of that even?
If it's just for the sake of writing it off, there's no point of it. But if your family members are actually helping you that and you want to pay them, then it totally makes sense. It's
Got
just
it.
like hiring someone like a third party.
Mhm. Cindy, are there any other tax saving strategies that you think are overlooked or popular that you seem to use often with your clients?
I would say like RSPs, like I know a lot of people like automatically think, oh, I need to put money in RSPs for like first week of March because I want that tax write off. But nobody actually like sits there, looks at it, like, does it actually make sense for you? And how much money is it actually going
Mhm.
to save you? And kind of thinking long term, or even if you go to the bank and say you want to open an RSP account, they're not asking you those type of questions. Like,
Right.
well, why do you want to put it in? Like, they're, and there's
Kind of
just like
like
no
a
math.
reckless one, but in reality, it doesn't fit everyone's scenario.
Right.
Are there any recent changes in tax laws in Canada for the 2024 tax filing year that self-employed people should be aware of? Any new programs or any changes to existing programs?
As of right now, like self-employed taxes like stays the same. Like your income's gonna be your income, your expenses are gonna be your expenses. There's not really like the tax brackets depend on what your income is. Whereas if you're incorporated, your taxes are gonna be at 11% for the first $500,000. So really just
Got it.
strategize, I would say more of the write-offs that you're claiming. So like if
Mhm.
you're planning to buy like office equipment or like furniture or something, really looking at the timing of it, does it make sense to pay it in the end of 2024 versus 2025, depending on what your taxes look like? And like it all just comes down to sitting with your accountant and trying to play around with the numbers and understand, do RSPs make sense? Like taking advantage of the home savings accounts, what your write-offs look like, what you're kind of planning for the next year and seeing maybe can you do it now? So I would say
Okay.
there's no one size fits all. It's just like customized strategies based on the person and actually sitting down and looking at those things and planning versus scrambling in April because you can't do anything till year's over.
Are the automated softwares like Simple Tax relatively good at helping people do this on their own, or would you say it's best to work with a professional? And I know your answer might be biased, but
Yeah. I would say like if you want to do it, like I've had clients come to me last year where they did it themselves and then they want me to audit it and refile it. So it's kind of
Mm,
like
mhm.
you're kind of going back. And also if you file it by yourself and CRA questions there or audits you, like you're gonna go in panic mode and be like, I don't know how to answer this or deal with this. So with a
Yeah,
professional.
yeah, I agree with you. And one of the kind of philosophies that I believe in life is when you try to save money, oftentimes you end up spending even more
Way
because
more.
you go back
Yeah.
to mistakes. Cindy, you made this tax conversation sound so easy. I loved everything that you shared. If there is one thing that people take away from our conversation today about taxes for self-employed people, what do you think it should be?
I would say just learning everything you can write off and taking the time to like actually educate yourself because the tax filing deadline's the same every year. You know what you need to do, but you're still scrambling in April. So why not just sit with a professional once and just get a full understanding of what you need to understand? I do consulting calls all the time. I have a 4-week reset course I offer entrepreneurs as well. So they get a full understanding of what's required. Once you have that knowledge, it's going to take you so much further and you're going to be prepared. You only spend 2 hours a month on your finances. And then you can ask your accountant questions that they might not be telling you things about. So just showing up confidently with your tax and finances.
Cindy, thank you so much for being with us today. I really appreciate your time and all the insights you shared. We'll include the links to all your social media channels, your podcast, and the PDF that you mentioned in the episode today in episode notes.
Thank you so much for having me and creating a space where we can talk about finances.
Thank you for tuning into In Her Wallet. If today's episode inspired you or gave you a new perspective, it would mean so much to me if you followed us on your podcasting platform of choice, shared this episode with your friends, and left a 5-star rating and review. I want this episode to serve as a reminder that you're not alone in your financial journey. This podcast is your guide to financial success, equipping you to live your best life without sacrificing your financial future. It was Sofiia with you this Wednesday, and I will see you next week.